Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and I'm excited to share today's top stories with you. We're starting off with a look at the latest developments in the Indian stock market. Sterlite Electric, a part of the Vedanta Group, has filed its draft red herring prospectus with the Securities and Exchange Board of India (SEBI) for an initial public offering (IPO). The issue comprises a fresh equity sale of 77.9 lakh shares and an offer for sale of another 77.9 lakh shares. The company plans to use the net proceeds from the fresh issue to repay or prepay borrowings, fund capital expenditure requirements, and for general corporate purposes. This move is seen as a significant development in the power transmission and distribution sector, which is expected to undergo substantial expansion in the coming years. According to a report by CRISIL, India's transmission sector is projected to invest heavily in interstate transmission systems to integrate 500 GW of non-fossil fuel capacity by 2030. Meanwhile, the RBI has also made some notable announcements, including a reduction in the repo rate and an increase in the reverse repo rate. These changes are expected to have a positive impact on the economy, with experts predicting a boost to credit growth and a reduction in borrowing costs for consumers and businesses. In other news, shares of HUDCO and Indian Bank have seen significant gains after the government announced plans to infuse capital into public sector banks. This move is seen as a positive step towards strengthening the banking sector and improving liquidity in the market. We'll also be keeping an eye on the performance of major stocks, including Reliance Industries, HDFC Bank, and Infosys, as they continue to drive the market trend. As we navigate these complex market developments, it's essential to stay informed and up to date with the latest news and analysis. That's why we're here to provide you with unbiased and expert insights on the Riskwiser Zone. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're halfway through our show today, and we've got some exciting stories lined up for you. In our previous segment, we explored the world of fintech and its impact on traditional banking. Now, let's shift gears and dive into the world of cruising and hospitality. We have two major stories to share with you, one from the UK and another from the US. First, let's talk about Tesco, the British retail giant, which is expected to announce its half-year results soon. The company has been facing challenges in recent years, including increased competition from discount stores and online retailers. However, with a new strategy in place, Tesco is hoping to turn things around. On the other hand, we have Carnival Corporation, the world's largest cruise line operator, which recently reported its third-quarter earnings. The company saw a significant increase in revenue and net income, thanks to strong demand for cruises and higher onboard spending. Carnival also raised its full-year outlook for the third time this year, citing robust booking trends and high prices. It's interesting to note that while Tesco is struggling to find its footing in the competitive retail landscape, Carnival is thriving in the cruise industry. This just goes to show how different industries can have varying levels of success, even in the same economic climate. Now, let's take a closer look at Carnival's earnings report. The company reported revenue of $853 billion, beating analyst expectations, and adjusted EBITDA of $3.0 billion. Net yields increased 4.6% year-over-year in constant currency, while gross margin yields improved 6.4%. Passenger cruise days totaled 27.5 million, with occupancy steady at 112%. Carnival's CEO Josh Weinstein attributed the strong results to robust demand and onboard spending, as well as the company's successful demand generation efforts. With nearly half of 2026 booked, Carnival is confident about its prospects for next year. However, it's worth noting that the cruise industry is not without its challenges. Rising fuel costs, environmental concerns, and regulatory pressures are just a few of the factors that could impact Carnival's future performance. In conclusion, while Tesco and Carnival may be operating in different industries, they both face unique challenges and opportunities. As investors, it's essential to stay informed about the latest developments and trends in various sectors to make informed decisions. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We've had a fantastic discussion so far, exploring the world of finance and investments. As we wrap up today's show, I'd like to highlight some interesting stories that caught my attention. First off, let's talk about dividend investing. We all know that dividends can provide a relatively stable source of income, especially during times of market volatility. And speaking of stability, Johnson & Johnson is one company that comes to mind. With its impressive track record of increasing dividends for 63 consecutive years, it's no wonder why J&J is considered a dividend aristocrat. But what about other investment opportunities? Our friends at Geobanking Rates recently published an article highlighting 3 value stocks that could have made you rich if you had invested in them 20 years ago. Cintas, Home Depot, and Johnson & Johnson were among the top performers, with returns ranging from 1,500% to over 2,600%. Of course, past performance is not a guarantee of future success, but it's certainly worth noting. On the other hand, we also came across an article discussing some promising dividend stocks in the telecom and banking sectors. These industries can be quite cyclical, so it's essential to do your research and consider the potential risks before investing. Now, I know some of you might be thinking about exploring alternative investment options, such as AI stocks. While these can be exciting opportunities, it's crucial to approach them with caution and thoroughly evaluate the potential risks and rewards. As we conclude today's show, I want to remind everyone that investing always involves some level of risk. It's essential to stay informed, diversify your portfolio, and never put all your eggs in one basket. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.